Good morning, everyone. Welcome to our panelists and to everyone in the audience. Our session today is about unlocking climate finance through innovative guarantee solutions. We all know that to transition into low carbon and climate resilient solutions, trillions of dollars in global investment are urgently needed. Significant barriers still persist. Sovereign balance sheets are stretched. There is an absence of bankable projects, underdeveloped markets, and a lot of the private capital is still on the sidelines. And unlocking this capital is going to be crucial to meeting the climate goals. In July 2024, World Bank Group took an important step forward by combining all its guarantee products under one platform called the World Bank Group Guarantee Platform housed in MIGA. This brings IDA, IFC, IBRD, and of course MIGA balance sheets together to provide guarantee solutions to public and private sector clients worldwide. By consolidating and simplifying our guarantee offerings in a single platforms, we hope to reduce complexity, innovate, and de-risk project pipelines at scale. Public sector projects, private sector projects, local currency, foreign direct investment, and a broader and deeper set of risks. Today, we will explore how the guarantee platform can play a key role in advancing both climate and development goals and help unlock the capital needed for the climate transition. So I don't want to say much more. Let me introduce our distinguished panelists. Joining us today are Hiroshi Matano. He's the Executive Vice President of MIGA. We also have with us Jay Collins, who is the Vice Chairman of Public Sector and Banking at Citigroup, as well as Enrique Vasconcelos, Head of Sustainable Finance at Banco do Brasil. Hiroshi, I'd like to turn to you first. The new guarantee platform, with the goal of reaching an ambitious $20 billion by 2030. Why did President Ajay Banga choose to consolidate all World Bank Group guarantees under MIGA? And MIGA, as we know, is the youngest and the smallest institution within the group. Could you give us more information on that, please?
Well, thank you for the question. And first of all, I just want to thank everyone attending today. It's good to see there's so much interest in our guarantee products across the World Bank Group, and I appreciate all the support that we received recently. But it's really Ajay's vision about how to use the guarantee products to help the development of our host countries. But it really started with the G20 recommendation, and Jay here really was instrumental in trying to put that together, so thank you for that. But it is based on our discussion at the Private Sector Investor Lab. There was a lot of discussion how we can bring in the private sector into development. And there's several points that we covered, but the first one that came up was, can you enhance and boost the guarantee products at the World Bank Group? So based on that suggestion, in Marrakesh last year at the annual meetings, Ajay announced that we'll in fact bring the IBRD products, guarantee products, IFC guarantee products, and MIGA guarantees onto the same platform hosted by MIGA. And that took about 6 months, 9 months to accomplish, but now on July 1st, we were able to deliver on that promise. We only started this is month 4, I guess, but still we see a huge response from not only our host government clients, including Brazil and others, but also from our private sector partners. So we see a very kind of strong pipeline at this point. And we're quite excited in using this new products. Maybe we can combine it together. Maybe we can find a new application like carbon credits. So there's a lot of possibility And as a financial specialist, I'm quite excited what we can do in the future. So we have a very high target of 20 billion by 2030, but Ajay's expectation is really to exceed that. So a good start, and I think we're going to have a good year also. So thank you again to everyone.
Thank you, Hiroshi. It's indeed very exciting. It's not just the balance sheet, the products, but it's also the expertise. And as you often say, the largest guarantee house probably in the world. So we are indeed very excited about that. And Jay, let me now turn to you. Citibank is a leader in promoting sustainability, in addressing climate change. You were recently financing the Kazakhstan railway project that MIGA supported. Can you tell us how can the platform enhance your efforts to unlock, develop bankable pipelines of projects?
Thank you. I don't know if you can hear me. It seems so loud in the background that I just want to make sure that it's okay even in the back. Perfect. Well, thank you for including us today. And Citi's so proud to be a partner of MIGA and Hiroshi. We've worked together for a very long time. I think the first thing is that, you know, I have said for a very long time, I think one of our first conversations was I said we need 100 times more MIGA. And by that I mean that the most important tool in the private capital mobilization toolbox is actually guarantees. It's where the most bang is out of everything. I mean, short of equity, of course, but it is extraordinarily enabling. With a guarantee, high mobilization rate. Without a guarantee, low mobilization rate. It's just that simple. So the fact that Ajay not only understood this, but then embraced it is a fantastic step forward in this journey toward private capital mobilization. Now, it's also critical as we look at the inner layer and the outer layer, as we think of what we're going to do to get to this outer layer. Let's call it $1 trillion, wherever it comes out. But you can't do that without supercharging the guarantees, and they are part of this platform strategy. And I would just say that, as Hiroshi and I have talked about this, and he just said, this is really the beginning, right? We're just months into creating the platform, and that's just phase one. I think the constructive engagement of the MIGA team on innovation, on what really can be done now, is going to be so critical to taking it to the next step. And that means is, you know, are we really testing the outer boundaries of where the risk absorption capability is of the insurance market? Probably not yet. So that would lead me to believe we can go beyond 20 billion with effort. And I gather that maybe Ajay and others have a view we can keep pushing that. I think there are a lot of technical features that we can continue to improve on. And one of the biggest, I think, is that, as many of you know, Basel is not conducive to infrastructure, and it's not conducive to global banks in particular. And so there's a partnership that's necessary to put the regulators in the room to refine a lot of this. The fact that there's looking at streamlining not just within the platform, but between the platform and other partners, meaning liquidity providers, which makes the product more efficient, meaning with other MDBs, with finance and common partners. There's so much that can be done to take this extraordinary know-how around guarantees and accelerate it through the system. And then finally, I think one of the things that partnership on the ground, you mentioned Kazakhstan, but it's true across the world for Citi, is that structures that understand how to push this into the capital stack is one thing, but creating deal pipeline is another. And quite frankly, even if we had $1 trillion, we couldn't use it right now. And we don't have enough feasibility study complete projects. And so one of the things we've talked about is how does the platform originate more? And that, again, it's a partnership approach. But what's fantastic, and I'll stop here, is that everything that we see from the team and the intent and the vision going forward is to do exactly that.
Thank you very much, Jay, and thank you for emphasizing the Basel aspect, because capital treatment of guarantees in the context of project finance is certainly an area where we would all like to see significant improvements on the regulatory side. And also the deal pipeline, another very important element. One thing I'm going to touch on is the way we're working within the World Bank group right now in terms of one World Bank group, the Global Challenge programs, and intervening upstream to downstream from the LTS long-term strategies all the way down to decarbonization pathways, helping clients come up with bankable project pipelines, helping them prepare them, and then, of course, once the enabling environment is in place, coming with guarantees for the residual risks so private sector can come in. But all of this really needs to be in place so we get that pipeline going. I'd like to turn to you now, Enrique. You are one of our public sector clients, but you're also an important private sector client. You kind of wear these two hats in a way as one of the largest financial institutions in Latin America. And Banco do Brasil over the years has increasingly been focusing on low carbon, climate resilient projects, and you have a number of financing initiatives in place. How can the guarantee platform keep supporting Banco do Brasil in these efforts? And you know, we have recently worked on an agribusiness project. Can you tell us more?
Yeah, of course. Thank you, Sabiha. Thank you, Hiroshi and Laura, for the invitation. I'm really happy to be here again with you since New York until now. It's a very interesting question because this deal that we did with MIGA, it was brings a lot of innovation because at the very first time we put additional guarantees on agricultural projects, and our deal, $800 million, represents supporting 300,000 families in Brazil, and this is huge. What we can show to you as Banco do Brasil, we show what it really happens in the field. And we have this condition to deliver directly to families, to farmers. Since this year, we launched in Brazil, in Belém do Pará, where it will be the next copy, and also Manaus, 2 points in the heart of Amazon. We launched a bioeconomy hub the main point is not only take $800 million, but how to apply properly this money. And we put our own staff to go to the field. I personally, I told you, I go to the field. I put my boots, I exchange my clothes and go inside the forest to see around, to understand their necessities. And what I see is it's not only about money, but also about training, about technical assistance, and we can do it. And in terms of sustainability, when we put different actors, each doing what they do better, that's the point. And MIGA is wonderful because with your guarantee, you know, I can bring money in better conditions, and these better conditions I'm offered to my clients. And because of that, it's huge. Here we show the whole value chain until the field, and I'm happy because since New York to here, we dealing with you with Citibank, the very first time an American bank dealing with Brazil, with Banco do Brasil, and also Brazil and Latin America, in terms of a green trade finance, and with discounts about ESG targets. It's huge. And during this panel, I'm talk a little bit more about. I have a lot of news. The next year in Brazil, we will deliver, we will show the specific cases to see how it happens really. Because it's easy to say, oh, I bring money, I bring, but how we can apply the money properly, that's the point. Thank you.
Please, Hiroshi.
May I just emphasize this point? Really, I think the guarantee products is about partnership. So we do need to have the Banco de Brazils of the world who actually implement, use the proceeds to make a difference on the ground. At the same time, we need the international capital markets to bring the capital into that country. And really, what our role is to help facilitate that flow. Also, we can't forget about our reinsurance partners that help us in the risk kind of mitigation, in risk sharing. So it's really where the platform will center of a unique kind of emerging ecosystem. And what we're trying to do through the initiative is trying to foster that ecosystem and make more partners. So I think both of them have a very good point in explaining that.
Yeah, it's a little about that because risk sharing is the point. Without sharing the risk, a lot of projects just doesn't feasible. That's the point.
Indeed, thank you, Enrique. Thank you, Hiroshi, for that intervention. Partnership is really the name of the game, and we need so many partners, and reinsurance, of course, being another important component. Thanks for bringing that up. And MIGA has, over the last 35 years, built very strong inroads into that reinsurance market and built a lot of trust around the MIGA name. And we do have this quadruple bottom line. It's not just financial risk, but also sustainability, development impact, and Paris alignment that we look for in working in partnership with all our clients. I'll move on to a second round of questions, and then I'll open it to the audience. I'm hoping you also have questions to pose to our panelists. And Hiroshi, just to come back to you, please. Of course, you mentioned there were many consultations in setting up the World Bank Group Guarantee platform. What should private sector partners, investors, lenders, as well as clients expect this World Bank Group Guarantee platform to evolve and improve under this new initiative?
Well, we just started this initiative, so we are kind of seeking for advice. I think that's the right way to say it. How we can use this new platform. As I mentioned, I think the history of the World Bank Group Guarantee products is really about innovation, finding a new way to help mobilize more private sector money. So we'll try to be innovative. At the same time, we'll try to be user-friendly, more efficient in doing our processes. But it's really something, just coming back to the original point, it's a partnership. So we want to ask really the cities, banks of the world to, tell us what we can do more better. But at the same time, there's a lot of ideas within the World Bank system. Just to think about it, the World Bank is the only entity in the world that has offices in every emerging country. So we have touch points with a lot of people. Are we using them enough for private sector mobilization? Maybe not, or there's some room to improve. So, there's a lot of things that we need to do more better. And I think that's the heart of what Ajay's kind of thinking is. So we look forward to having a conversation like this. But honestly, we were looking for advice. So we'll see how it comes.
Excellent. Thank you very much. And we're looking to continue to improve, I guess, is the message. One key area where guarantees are going to be important is carbon markets. And this was a big topic and has always been at COP as well. There was a breakthrough at this COP. We're all very happy about that. And MIGA is looking to support the growth of carbon credit markets. There is a launch event of our LOA coming up tomorrow, and at the back of that, we are planning to provide insurance cover to investors. Enrique, this project we have recently worked on with Banco do Brasil is expected to generate carbon credits. Can you tell us a bit more about the project and especially how you are planning to access carbon markets?
Yeah, thank you for the question. I'm in front of the Pope, Chandra. Don't be shy. The Pope of carbon credit market. We started to dealing in these markets 4 years ago. We dealing right now in the voluntary carbon credit market because Brazil is ongoing in the compliance market, and what makes difference is the true worth, because Banco do Brasil we know our clients, we know the landowners, we know how it's possible to do a really good project with high integrity. That's the point, because currently we have almost 2 million hectares protected directly by carbon credit projects. We have 5 million per year tons of carbon credits, and we're looking for more. When we started, we focus on REDD+ and reforestation, but now we are doing biogas, we are doing energy efficiency. And with this project, I'm really excited because looking to agribusiness, it's really important. Brazil is I think the third country worldwide in terms of food production, and we are half of our agriculture portfolio is considered sustainable with low emissions, and with this deal, we will incentivize good practices on the field. It's huge. It's really beautiful because we are moving the market. It's amazing. And with adding the carbon credits, we can push faster. And most important, we are dealing right now with MIGA guarantee. We will guarantee better prices, fair prices, because sometimes a really good project doesn't have a fair price. And again, we delivered one innovation this year, and I'm really excited to deliver more and more innovation, because when we put big actors together and we can move the markets, it's huge in a good way. That's the point. That's our point. We are really concerned to Brazil preservation, to reduce our emissions, and I'm really glad to have you in this partnership to do it together.
This is wonderful to hear. Thank you. This is indeed a market creation exercise, and we are looking to bring part of the tools, the letter of authorization, which will be launched tomorrow, as well as our guarantees to help improve trust in this market. But of course, MIGA, working with our clients, will also bring our approach to sustainability, to development impact, and all the due diligence that comes with that. But needless to say, this will still require more partnerships to really reach its full potential. Jay, to you for the last question before I turn to the audience. We talked a lot about partnerships on this panel, and can you tell us more? Why are partnerships with MDBs like the World Bank Group important to Citibank, and where do you see the potential for most growth and collaboration?
Great. Well, that's an extraordinarily wide open question. So let me see if I can, kind of take a couple pieces of it. One is that I think, as Hiroshi said, the different types of partners is extraordinary, right? Because it takes an ecosystem to really make this work. And to grow the private capital mobilization across the SDGs, not just climate, all of the sustainability factors, just requires really Herculean efforts. And while I would give, I would give an A to the MDB community for capital efficiency reforms from the G20 report to now. I think we have a long way to go to get that A in private capital mobilization. And so the partnerships that are necessary to really get there start with this platform, but there's an awful lot more that has to be done to really say, how do you reform and reposition the incentive structure and the actual products and solutions within the MDB community to mobilize much, much more. And it's not just guarantees. So that's going to require partnership. I think that specific to, again, this conversation, I want to reemphasize how important the insurance market is for this partnership. I mean, insurance companies are takers of risk, and how we use them and how the expansion of these guarantees really enables us to put risk to them is so important. It's mechanical, but it is a distribution of risk function into the market that is part of this capital efficiency and the growth of what the MDB's just committed to. Second, I think that the partnership on the ground in countries with banks that originate, with governments that come up with projects but don't have the feasibility studies done, the partnership around the structures is going to be so important. And what I think that the world still has to deal with is that it's increasingly easier to structure at the middle-income countries these projects. And we have a lot of work to do to say, how do you get at the weakest credit zip code players? Because a lot of what we're trying to do in PCM just isn't working. And I would argue that even MIGA right now, unless it adapts its policies, it's very hard to help the single B. So we're going to have to think partnership in terms of that. And then, finally, it's odd to say regulators as your partner. But if you start the dialogue saying that we fundamentally accept financial prudence, systemic safety and soundness principles, and that is the starting point of any dialogue with policymakers that are either pro-development or pro-climate or pro-infrastructure. But it's also the starting point with the regulator in the room around the very technical, by the way, technical in a way that is financier and regulatory technical, not even in the domain of most of the senior policy leaders of the world, to sit down at the table and really look at what GEMS data means, what some of the nitty-gritty regulatory line items of Basel are, and what they mean, not just for guarantees, but what they mean for private capital mobilization and MDB crowding in the private sector, and quite frankly, just infrastructure, whether it's green or not, infrastructure finance in the world. Right now, it doesn't work. And so I think it's time for the regulators to be embraced as partners where their purview is accepted fully, but where we can have a real calm private dialogue about risk and interpretation of risk and confusion around regulatory items that are interpreted differently by different governments, even within the G7. That are subject to conservative or non-conservative interpretation by the banks. And that actually does require a partnership approach in the room to agree to disagree, but to wrestle with the facts of what's really happening right now. So that's, I think, one of the biggest asks that I would have of Matano-san, Ajay, but also the MDB community, is to lean in to banks don't put the regulator in the room. Banks can ask for the regulator to be in the room, but we really need you all to convene that dialogue in an appropriate way so that it happens faster.
No, thank you for that. Financial regulation is such an important topic. One of the discussions points that we had at the Private Sector Investment Lab was exactly this point. So we're through a lot of bodies, we're trying to reach out to the regulators to have a more kind of a thoughtful kind of review of the implementations of the regulations that are in place. So that's something that we take seriously. Thank you.
Thank you, Hiroshi. Thank you very much, Jay. It's very interesting. We started out discussing the potential of the World Bank Group Guarantee Platform for Climate Finance. We touched on binding constraints at the local level, and it's around regulation, policy, and government leadership. But at the level of the global financial architecture as well, we have similar problems, primarily zooming in on Basel III and its treatment of project and infrastructure finance, so that we can indeed recognize, firstly, the GEMS database, the data it's showing, but also the guarantees and our track record in terms of preventing issues arising in these projects and supporting their strong track record. So thank you very much for this very interesting discussion. I'd like to open it up for questions now. Please.
Okay. Thank you. Quick question. You mentioned that, and I agree with you totally, and I think this is part of the NCQG. I get all those letters backwards, but the leveraging value of guarantees, to bring in the private sector is key, and I think it needs to be part of this conversation, like where this money is coming from. But there's also the reverse happens in MIGA all the time, where the private sector, basically leverages MIGA through reinsurance, right? And now everything's being put into the same house or under the same roof, so to speak. Is there a way, because I work with the Task Force on Credit Enhancement for Sustainability-Linked Sovereign Debt. It mainly works with, I work with the Nature Conservancy, and we refinance country debt, so it's a sovereign exposure, and it takes a lot of credit enhancement. DFC has been doing most of it, and they just did a $1 billion transaction, which was not with us, in El Salvador. But they regularly, like MIGA, reinsure that out, right? Whether that actually takes it off your balance sheet or not, it does bring the risk parties out and into a very large market. So is there a way with the new structure that the MIGA skills on the reinsurance can flow into the World Bank guarantee space? Because if we're looking at the difference between a guarantee and a political risk insurance, which we use at DFC, which is a little bit complicated in the arbitral award default cover, with the few data points we have, I estimate that would save us 100 basis points of savings. And the savings is what's funding the conservation and the climate, right? So if you're doing $1 billion deal for 20 years, you're talking $200 million extra from using a guarantee as opposed to political risk insurance at this point in the market. I think that will change. And that's what the task force is all about. We've spoken about this task force. And now that you guys are restructured, I'd like to get you more back on that task force and more involved.
Well, we're more than happy to be part of the task force. I think that's one of our jobs. Just to explain what the gentleman said, also what Jay mentioned. So basically, MIGA has only $2 billion in capital, but it's able to mobilize $30 billion. So it's a 15-time leverage there. So and the magic, why is that happening, is really the partnership with the reinsurance community, like the Lloyd's of London and so forth and so on. So we have about 30, 40 partners that share our risk and appreciate not only the risk, but also the way that we deploy our capital in a climate-friendly way, or gender, or all those kind of so forth and so on. So it's one of the unique kind of parts of the ecosystem that we're trying to develop. But obviously, using that for not only the Amiga products, but also for the World Bank products is something that we want to think about and see how it goes. Having those kind of swap, kind of natural nature swap kind of elements, I think is something that we want to look into. So again, it's quite an exciting proposition that we have, but we're still at month 4. So, it'll take some time, but hopefully we'll get there within the fiscal year.
I think Jay wanted to come in, and then perhaps Enrique.
Yeah. I will comment. In Banco do Brasil, we have $70 billion ESG portfolio, and we have $7 billion in guaranteed. And obviously, we also all the time looking to leverage the numbers because it's really important. Again, as I said, apply the money in the last point. For example, we did very recently the EcoInvest. I don't know if you're aware. The Brazilian government offer very cheap money. It's a blended finance, and we leverage 6 times. And I understand totally, and I count on you to offer more guarantee to, and I promise to leverage directly to the last point, and apply properly the money. And it's really important because our money, we say here, it's not enough to make the preservation, to make the development, and it's important to leverage the more the better.
Thank you, Enrique. Jay?
Yeah, if I could just answer the part or give a perspective on the part of the question related to the new collective quantified goal, because a lot of people in this room are very much focused on that, right? So I think this, let me just do simple math, and you'll see how difficult this is. So if you say that the outer layer, the big objective, is to get to $1 trillion, and you say that the official provision, that the government's commitment, call it the inner layer, let's just say they get to 300 billion, with whatever it is, so call it the 130 of the MDB money plus. But let's call it, let's be generous with the negotiators and assume they can do what they did in a miracle in carbon credits, that they can pull a miracle for the new collective quantified goal for their portion. By Belém, because we are going to have to deliver ambitious NDCs, we have to have confidence in the gap between the inner layer and the outer layer. And basically what that means is, that's simple math, that's the private sector, right? That's the math. So you have to put a mobilization rate then on that and say, how much more can you do? Because in the Copenhagen 100, you had kind of, let's call it 70-30, 75-25 of official private sector. So you had tiny private sector. So the important point here is that if you take the Vera Songway, Nick Stern report and you look at their numbers, you break down, let's call it everything that doesn't mobilize well: loss and damage, nature, adaptation. You take that off the table of what's in the inner layer, and you say, wow, okay, I have to get to that private sector mobilization rate off the back of mitigation. Now, the multiple that you need for that, when I try and do my basic kind of math, I'm struggling because you need an extraordinary mobilization rate. And you can't, by the way, get that if you include single B, weakest zip code, so kind of call it IDA countries. So now what I have to do to get from inner to outer and to add credibility to what will be done here and the very high expectations of Belém, we've got to work together with the private sector to say what was in what you agreed to here in great detail that allows us to actually be able to credibly say that the private sector could fill that gap, and that the trillion-ish number has real teeth and credibility, such that the Global South doesn't react to it the same way they have to the Copenhagen commitment.
Just thank you for that. I think it demonstrates the potential. I guess one part of the solution is the guarantees and the high leverage that we can multiply effect that this unique product has. I think that will be part of the solution. But it is evolving. Things are being discussed, and look forward. I think we're more than happy to be part of the discussion. But one thing is really having the private sector say that to us is really important for us to do a better job. So thank you for that.
Thank you, Jay. Thank you, Hireshu. Indeed, very good to hear. And one thing we also emphasize as we talk about the guarantee platform is the instrument is very powerful. But what we also need in advance of that is enabling environment, the right reforms, the pipelines, of course, that come with it really need to be in place, because we only have so much balance sheet. The market also itself needs to move, needs to come to the right place in terms of development, so the private sector is motivated to come and invest. That's really the starting position of all of this. And that's behind the bank's evolution roadmap, working together with IBRD, IDA, IFC, and of course MIGA coming in there with this very crucial instrument and approach. Let me turn back to the audience to see if there are more questions. We are going to wrap up in a few minutes, so could take only one last question, if there is one.
Hi, thank you. My name is Aina Rodriguez from Climate Strategy, and I'm leading a group of corporations that are working on supply chain decarbonization, where they have to engage with thousands of SMEs that have more difficulties to access to credit to uptake new climate solutions in their businesses. And something that is starting to, let's say, kickstart is collaborations with banks and corporations to provide supply chain finance products to SMEs. And something that the banks from this group have told me is that they're looking at MDBs to provide more of these de-risking solutions like guarantees, and that this should be coupled with technical assistance to SMEs to, let's say, put these things on the ground and help them implement. What is your approach at MIGA in terms of the engagement with SMEs? Is it a proactive approach? Here I'm thinking a bit of the US Department of Energy Loan Program Office that has quite a proactive outreach to clean tech projects and young startups that are looking for these enhancements of credit and access to loans and other instruments to scale up. So yeah, SME approach from MIGA. Thank you.
Well, thank you very much for that important question. One of the themes that we discussed at the recent annual meetings was the importance of jobs. Job creation is critical for development. Also, it goes hand in hand with climate, but jobs is really something that we can help the population to escape the terrors of poverty. So that's really important, and I think one of the RJ's initiatives is really to focus on that topic. To create jobs, providing financing to the SMEs is also important. And the bank group has been doing that over years. But through our discussion or strategizing, I think that will be more important. But again, it is how we can contribute to that topic is really through this ecosystem. So we need someone in the host countries that provide financing for the SMEs, say in Brazil, but also we need the city banks of the world to provide us finance, and will help facilitate that transaction. And also reinsurance becomes a big part. So I think this kind of unique ecosystem that we're creating together will be equally applicable, not only for climate, but also in helping the SMEs.
Yeah, I want to complement. SMS in Brazil represents at least 8%, 8% of total employees in Brazil. It's really important to support SMS. Our very first deal with World Bank, we focus on SMS, and at that time, I'm just love to deal with you because always we bring some innovation. At that time, we bring a really nice innovation about mitigation plans to SMS, and Banco do Brasil and World Bank provide technical assistance to teach how to build a mitigation plan, how to measure their emissions, because a big company, it's easy to do it, and is small companies, small and medium companies. And because of that, at Banco do Brasil, we have a strong focus on SMS, and obviously we always rely on our partners, because again, we have we have funding a lot, but funding with low prices always welcome, and the more the better to offer to our clients better conditions. In this specific case, we support this assistance to SMS, and also provide the system. We developed a really nice system to measure their emissions. Okay.
May I just I think what you're asking is spot on, is how do you leverage the global guarantee structures to the benefit of the SMEs? And there's two ways to think about that. One is that the best way to get at the chain is at the top of the chain. So if you start with the leaders that have offtake capability and stronger credits, you can actually push money down to the supply chain, to the SMEs throughout the chain in pretty much any sector, and you know, whether it's ag, whether it doesn't matter actually the sector, but just take the leader of the chain, the strongest player, and then you take a Citibank that doesn't bank the SMEs, and you take the MDB community, including the World Bank Guarantee Platform. You can, at the top of that chain, you can guarantee there and push down through the supply chain. So I think that's how we're gonna, I don't see a world where we are able to push MIGA-like guarantees to SMEs directly. So you gotta think indirect. The other way you can think about it is banks that bank the SMEs that are local banks, like the Banco do Brasil, that in country have those relationships, have those credit relationships, and understand to put together programs that are then wrapped and guaranteed with the local bank, with the guarantees and the global banks pushing funding there to de-risk, again, that segment. And so we're gonna have to be creative. I just don't think you scale at the speed you need to by trying to take these global structures and get them to the SMEs without these intermediaries. Again, it gets back to, Hiroshi, the partnership approach. We're going to have to really look creatively for the local partners.
Indeed, once more partnership, and I'm happy to also plug in here that the Guarantee Platform recently launched a new product called the Local Currency Mobilization Facility, exactly intending to partner with governments, local banks, and potentially international players in the domestic market as well to create these local currency lending ecosystems for nascent borrowers. So we're certainly watching that space carefully and looking to grow MIGA's footprint. Okay, well, thank you very much to our panelists for your engaging interventions, and thank you to the audience for participating. We're going to wrap up here. Enjoy the rest of your day. Thank you.